Very, very quickly, do these banks make a lot of money from the muni underwriting business right now?
I'm afraid I don't know exactly how much they make, but from city exit, as you mentioned, it doesn't sound like it's been a very lucrative business in the past decade or so. However, it is a relationship business, and things could change, and they should change. And with a lot of talk about infrastructure needs in the U.S., this could be a booming business. At least we hope so.
So when we talk about the momentum there, Eve, is there sort of a critical point that you're looking for where we're going to get more clarity on how much further this continues? Because we're already tracking, I know what, something like 40% higher than where we were last year. I know we're only 6 months through here, but if that continues, that's a pretty phenomenal run.
That's fantastic. Yes, 30% is great. More is better. And still with this increased issuance, we are still having insatiable interest in anything tax exempt. Part of it is because we've had a couple of years of under issuance, if you'd say, but also, as investors should know, other fixed income markets have doubled, quadrupled in size. The muni, outstanding munis, we are still at the same 4 trillion we were 10 years ago. So supply demand is truly out of whack for my market.
And there are a lot of entities issuing debt. And we see that particularly in the education sector. It seems like every time I'm looking for stories on the muni bond world, you have some small private college that's trying to raise money. I know why they need to raise money. What kind of demand is there for that debt?
Interesting, yes. There's some bifurcation on kind of higher yielding names, and especially small schools, small colleges and universities with decline in enrollment, with smallish endowment. I don't think they're finding as much interest in the market as they used to. They still able to place the deals, but it is coming at a higher cost. One of them is just going after insurance. Municipal insurance is somewhat back in vogue, especially for names like smaller colleges and issuers with somewhat stories connected to them.
I have to ask you, Eve, about the interest rate environment, particularly coming off of today's CPI report and the expectations that we might start to see Fed rate cuts. Part of what has aided some of the returns in the municipal bond market was that it offered pretty healthy returns, at least relative to what you can get elsewhere. Does that change if interest rates come down?
Yes, and I do hope that the Fed is not touching anything this year, that we will have a very reactive Federal Reserve, not proactive. So I am hoping that nothing will change this year for the muni market and the yields that we've seen. And our relationship with Treasuries, of course, is a big part of that.